Nvidia highlights gulf between AI winners and losers. Identifying them is tough, and 5 more things to know today discusses Nvidia's recent blockbuster earnings report amid the ongoing AI boom. Published recently around late February 2026, based on current timing and references to fresh results, it frames Nvidia's performance as underscoring a widening divide in the AI sector, where clear leaders like Nvidia thrive while others struggle, and highlights challenges in pinpointing future winners beyond the obvious. Nvidia reported exceptional fourth-quarter results that significantly exceeded Wall Street expectations, reinforcing its dominant position in AI infrastructure. Key financial highlights from the earnings. Revenue reached a record $68.1 billion, up 73% year-over-year. Adjusted earnings per share came in at $1.62, beating consensus forecasts, which had been around $1.53 in previews. That data center sales, largely driven by AI servers and GPUs, were particularly strong, rising sharply, e.g., noted in related coverage as up around 75% in some breakdowns to $62.3 billion for that segment. Guidance also impressed, with the company projecting continued robust growth in the current quarter, including revenue expectations around $78 billion in some reports and high profit margins, e.g., around 75.2% in forward-looking commentary. Nvidia CEO Jensen Huang emphasized during the earnings commentary that demand for compute power is growing exponentially, a statement that captures the insatiable appetite for AI training and inference capabilities. This has fueled Nvidia's explosive growth, but also spotlights the gulf between AI winners, companies with strong access to advanced chips and ecosystems, and losers, those facing supply constraints, higher costs, or slower adoption. The article notes that while Nvidia's results were met with rave reviews on Wall Street, the stock's immediate reaction was muted in some coverage, potentially due to high expectations already being priced in or broader market dynamics. Analysts have viewed the shares as potentially undervalued at forward multiples, around 25 times projected earnings in some assessments, with upside potential cited up to 23% or more from certain price targets. Broader context in the piece ties into things to know today, including how Nvidia's blowout caps earnings season on a high note for tech/AI stocks and what it signals for a sideways market. It also touches on sustainability questions around AI spending, though the strong results appear to ease some fears in the short term. In essence, the Barron's piece portrays Nvidia as the standout beneficiary of the AI surge, with its latest quarter demonstrating unmatched execution in a competitive landscape where separating true winners from the pack remains difficult for investors. This performance solidifies Nvidia's role as the backbone of the AI revolution, powering everything from data centers to emerging applications, even as competition from other chipmakers intensifies. Investors continue to watch closely for signs of sustained momentum versus potential slowdowns in the AI capex cycle.